Hey, it's doing something right now. I don't know if we're about to go live or not. Just
We're live.
all right. All right, cool.
I mean, you know.
Hello, everybody. It is Wednesday, 9:15. We're coming to you from Investing Education Academy. So if you can hear us and see us all right, please let us know with a comment. We'll do everything we can to monitor and answer questions along the way. So today we're talking about 5G. A lot of people are trying to figure out how to invest in 5G. What will it mean for the marketplace? What will it mean for the economy? There are a lot of opportunities in 5G, a lot of opportunities in 5G. Number one, are you in the market? Number two, how are you positioning yourself? We're going to be talking about that today. At the end of today, let me tell you all, we have a treat and we have some stocks that we found that we believe will be of interest to you all. This is aside from our normal pick at the end of the session. So we're going to show you a stock historically and you're not going to believe it. So Leon, you can jump into the 5G part.
Yeah, so we're going to discuss the coming boom in 5G. So 5G, so people that don't know, 5G is the new age technology provided by cell phone carriers. So AT&T, Verizon, Sprint. Right now, most of us have a cell phone, and right now most of us are on what's called 4G. But they're moving to something called 5G, which is significantly faster than 4G. There's a huge investment opportunity for investors to get in on this coming boom. The estimates right now are tens of billions of dollars that the market's going to be worth. I've seen anywhere from 50 to 100 billion dollars that all this will bring in to investors into the company. So it's a huge opportunity that's just getting started. So Brent, throw up the first slide when you get a chance.
Yep, and while I'm pulling up this slide, I also want to say 5G just isn't just about the technology. There are going to be a lot of industries created around 5G that we'll need to pay a very close attention to. So let me pull up this first chart.
Another thing about 5G, so what I'm talking about, what we're going to be talking about mostly today is 5G that we're all familiar with as far as like our cell phone providers and our phones. But there's another half of this too that's also what they call private 5G. And what that is, that's where you have industries like oil, natural gas, hospitals, technology, and the like. They actually have their own private 5G networks too. And that's also part of this multi-billion dollar industry that's coming. That like I said, it's already started, but it's going to build out for probably the next 5 to 10 years. So it's a huge opportunity. And what we're going to be talking about today is focusing more on the consumer side, which is the side that we're on with our cell phones. But there's also a private business side that we'll maybe touch on at a later date.
Yeah, and it's going to drive a lot of AI. So just understand what 5G is bringing. So we can dive into this first chart, which is going to go over 5G market revenue forecasted worldwide from 2019 to 2025. You want to take it, Lee?
Yeah, I don't see it. Is it up?
Oh, yeah, you don't see it?
Uh-uh.
All right, hold on. Let me see.
Ah, there we go. All right, now it's loading. All right, so yeah, so what this is showing, this is the revenue by the carriers, right? So there's really two primary ways to invest in this coming trend. One is via the carriers, like I said, that we all know, AT&T, Sprint, Verizon, and the like. And then the other side is network equipment providers or vendors. We'll touch on that in a minute. But what this is showing is the revenue that's going to be brought in by 5G services by Sprint, Verizon, AT&T, and the like. So if you see last year, so this chart is by billions. So you see last year they did about 710 million in revenue from 5G services. And 5G services really are so what 5G provides is a much broader spectrum for us to download in applications, movies, things like that. Like a lot of us right now may get like 50 gigs down or 40 gigs down. That's going to move up, or 40 megs or 40 gigs, I forget which one. But we get a huge amount down now. It's actually moving to the next level up. No, sorry, I think we get megs. I think it's moving to gigs. So right now we get a certain amount of bandwidth up and down. Well, 5G is going to double and triple that. And some instances even 20 times bigger. So
let me jump in. When he says up or down, he means download speed.
Yeah, download speed.
How quickly we download. Not everybody knows the tech side.
Very true. Good point. And just real quick, Verizon, their download, their speed difference between their 4G and 5G is 20 times faster for 5G. So that shows you. So anybody that has a Verizon phone and you use Verizon for to watch movies and things on your phone, imagine your download and upload speeds being 20 times faster than what it is currently. So that's what 5G is going to bring. But what this shows is, so in 2019, the industry did about 710 million in 5G services. This year it's going to be about 2.5 billion. The following year, 2021, it's going to more than double. And then, as you can see, between 2019 to 2025, you're going from 710 million to almost 24 billion. 24 billion in about 6 years. I mean, that shows the huge, massive opportunity that this industry is going to bring us. And that's only through 2025. The build out is actually supposed to go to about 2028 to 2030. So, do the numbers. This may push even like close to 30 billion in revenue for the network carriers, which for us would translate to their stocks. And those stocks in this instance would be like AT&T, Sprint, T-Mobile, and Verizon. Those are the big carriers. Now, the other side of this, the other opportunity in this is the network equipment providers. So in order for these carriers to upgrade their networks, they have to buy a whole ton of new equipment, routers, switches, fiber, things like that. So Brent, if you can go to the next slide, number 2.
Also, when you think about these companies coming in to buy this equipment, not only is 5G going to produce its own ecosystem of money just revolving, but you have to think about the people who are creating the copper wire, the recyclers of copper. I mean, it's going to be a trickle-down effect that's going to be incredible throughout our economy.
Yep, big time. Okay, so what this is showing, this is the, so you see at the top, it says global 5G network infrastructure spending. So these are what those carriers that we just talked about on the previous slide are going to spend to upgrade their networks to bring us 5G speeds. So last year they did about 2 billion in spending. And when I say spending, they're buying things like servers, switches, fiber, communications gear, communications testing gear. I mean, tons of money is going to be spent, as Brent said, kind of on the second tier of vendors that's going to help them upgrade their networks. So 2019, they did about 2 billion in spending. This year, it's going to be about 3.6. Next year, 2021 is going to be about 5. And you see it goes on and on and on, up to about 41 billion in 2026. So in a 9-year period, you're going from 2 billion up to 40 billion. I mean, that is a massive. And you can see the scale of each year's jump, is at least, 50, 60, 70%. Now those blue bars, those black bars over top of the big blue bar, that's basically the range of the estimates. So for instance, like 2023, they're saying the estimate would be about 16.2 billion, but it could go high as 30 billion. And it could be about as low as, say, about 5 billion. So that 16.2 is about an average, but it could be a lot higher. It also could be a lot lower. But as you go out in time, that lower estimate actually is rising each way. So I mean, like I said, this is going to be a huge windfall for investors like us, and for consumers like us that are going to use these services that these new services are going to provide.
Now, this is a great opportunity for anybody watching. What we always talk about when we talk about investing. This is a speculative marketplace that we're going into, meaning there's a lot of things that we have to assume, a lot of assumptions that have to be made, which makes it speculative. Now, when you're doing anything that deals with speculative money, you should be only investing a certain type of money. And Leon's going to tell us what that is.
So that is risk capital, and that's capital that you're not feeding your family with, you're not buying your medical drugs with, you're not sending your kid to college with. It's money that you can lose, and if you lost it, you still get to put food on the table tomorrow.
And you all are going to see an example. You guys are going to just be amazed by the example we show you of a stock that was in this group, if you will, that we saw in 1997, and we knew what it was possible of doing it in 1997. And we're going to show you the numbers from it. So if you're just tuning in, share it. If you're watching this, you might want to watch it again or call somebody over, because what you're about to see is probably going to make most of you all go, that can't be real. And so we implore you all, whenever we talk about investments, new industries, number one thing we want you to do, any Investment Education Academy member, we want you to do your research. Do your research, and then come to the group, come to our Facebook group and tell us about it. We're in the process of actually building out our membership platform. We're very close now, but we're building the Facebook group, and we're talking, we're exchanging information. Please continue to do so. And with that being said, we're going into about how many members in the group now?
Up to, I think, 116 now.
So it's been less than 6 weeks. We're 116, and this isn't 116 people floating. This is 116 people who are really reading, sharing the information. I mean, one person alone has referred over 21 people to the group. So it's definitely, yeah. So come check out why that's happening. Now, with that being said, we're gonna go into slide 3. And then after slide 3, stick around because Leon and I are going to give you our 2 picks for the week. In addition to that, we're going to show you a real life chart of what has happened with one of the companies you're going to see on the next chart. You ready, Lee?
Yeah.
Oh, and if anyone has questions, as much as we can see them, please let us know what they are. We'll be happy to address them.
Okay, so what this is showing, so in our research in studying kind of this 5G area, we found 36 companies that can actually benefit hugely from this coming boom, right? And here we're giving an example of those 36. We have 5 here. So the first one is Verizon. We all know Verizon, Fios and the cell service they provide to a lot of our phones. Second one is Qualcomm.
Real quick, Lee. So for those that don't know, Verizon owns a significant portion of cell phone towers. So whenever you're getting other carriers and you're getting these signals and you're getting bars on your phone, oftentimes, even if it's another carrier, it's coming through Verizon's lines, and they actually lease space from them. So Verizon is very well positioned, regardless of who's the front runner, to benefit from the 5G explosion.
Right. Yep. They're definitely the leading telecom. So second one is Qualcomm. So Qualcomm's a semiconductor company. Interesting about them is that they're actually one of the largest suppliers of silicon chips to the 5G iPhone. So they have a huge contract with Apple to supply equipment for the coming 5G iPhone that was supposed to come out this year, but because of the whole COVID-19 thing, I think it's been pushed back to 2021. Next one is Marvel.
Actually, let me just jump in on the back end because I got something about all of them.
Yes.
So
yeah,
you do intro. I'll just give a piece.
All right. Yeah.
Qualcomm, I love Qualcomm from a standpoint that they're very strategic and organized in their business approach to providing products and assets into the marketplace. They patent everything. They look at not only how their company is growing, but how their company's positioned, which is what I really like about Qualcomm. When cell phones really moved from, for those that hear this next statement, we're going to date ourselves, pagers and like the flip phones. Yep. Qualcomm was ahead of it all. They saw what was happening and they patented the digital communication chip that allowed for a signal to be digitized and received by any cell phone. So it didn't matter what phone you picked up, you were using Qualcomm technology. I want to say their patent expired about 6 years ago, but they're still very well positioned. And that was just one of them. That was their main patent, but they have hundreds. And oftentimes companies will create patents just to block other companies from having it, and they'll never use the patent. But that's a whole other thing. So Marvel.
Yeah, well, real quick on the Qualcomm thing, what's crazy about that is, like you said, Brent, they own that patent. So, and yeah, any phone that people bought back in the day, was Nokia, iPhone, Galaxy, Samsung, no matter what, they were all still paying Qualcomm. Even their chip wasn't even in it, they had to pay for that. So some company was providing them with chips, and they were using a Qualcomm patent. So Qualcomm's getting paid no matter what phone you bought. Yeah. Shows how deep in the game they were. So so next is Marvel Technology. So Marvel's a network equipment vendor. So think things like servers, some communication equipment, routers, things like that, that the telecom company have to buy to upgrade their networks. Corning is
Marvel.
Please
go ahead. Not confuse this with the comic book company. Yeah, but we laugh, but we've had investors inside of Investing Education Academy choose a ticker symbol thinking it was something else. So we want to be clear: it is not Marvel like comic. It is a tech company, and the symbol is MRVL. That was just clear.
And the full name is Marvel Technologies. So yeah, the full name is Marvel Technologies. So yeah, has nothing to do with Marvel, the comic book. Next one is Corning. So Corning is they're an optical communications equipment vendor. So things like for like the kind of more technical side, but they offer things like fiber that give us that really fast speed to the home and also to the phones. And finally is Keysight.
Oh, sorry. I mean, you just go.
And things like me, we know about Corning from back in the day.
Yeah, so Corning also makes Gorilla Glass.
Yeah, yeah,
So,
yeah.
so people need to know, and you're like, what is Gorilla Glass? So when we have our cell phones, that glass is it's a high probability it's produced by Corning. Corning has a similar position, like kind of like Qualcomm Verizon, where no matter who the producer is, they may be using their products, which makes them amazing. This glass is not even begun to really tap into what they're going to be using this glass for. You know, we're talking about bus stops, malls. The normal POS system may go away, where you're going to have ability to slide from your cell phone onto the counter at a mall, and everything that you want to purchase is right there for them to see. Corning is experimenting with this type of stuff right now in conjunction with eBay. And so you really want to know, I think eBay is working on like something called like a glass mall, or something to the effect of, if anybody's seen Minority Report, as he's walking through like the malls and the bus stops, subway systems, he's actually seeing ads that relate directly to him for goods to be sold. That is not just a concept, that is coming very soon. So Corning is one of the people that will be producing that glass.
Right. Yep. And last one is Keysight Technologies. So they're a network testing equipment maker. So they would things where people would test like things like servers, switches, things of that nature for the carriers that want to deploy these systems. They have to test them first, and they would use technology from Keysight Technologies. So these are 5 of the 36 that we found. A lot of them are they're often during. What I like about it actually was there are a lot of different sectors within it. So like we have chips, we have fiber, we have equipment testing, we have optical testing. So the 36 we found are in a whole bunch of different sectors too. So it's a lot of areas that drop a lot of money in different areas, different sectors of this coming 5G boom. So Brent, now let's hop on that. Hop on your example to show them this.
All right. So for anybody watching, what I'm about to bring up, you may not even believe it, but it's true. And Leon and I, many of you all know, we had a company. It was an investment club when we were in college. It was called Wealth Enterprise Investment Club. And we just wanted to share the knowledge of stocks and the possibilities of stocks back then. So if you're watching, share it. Like, share it right now. Call somebody over, because this is real. What we're about to show you is real. All right, let me pull it up. Okay. So
this is from your notes back in the day, right?
No. This is.
Oh no, you went. Oh no, yeah, you went back and looked it up. Yeah, that's right.
I went back to the notes to see when we bought it.
Right. Okay.
And then, but this is a chart from a stock company. I can look up what it is. So let me tell you all. This is Qualcomm in 1997 that we're talking about. Qualcomm has been around longer than that. They've been public longer than that. So we're just talking about Qualcomm from 1997 to 2000 in this example. I'm not going to read this big paragraph, and it's not necessary. What I want to show everyone is this. Leon and I talked about Qualcomm. I mean, it had to have been 96, 95. And we finally started to preach the gospel of Qualcomm. It was about 97 when we suggested that people actually purchase it. So in 97, Qualcomm, since 97, Qualcomm is split 1, 2, 3 times that we're aware of. I haven't checked to make sure this is completely accurate if they split again since 2004. But between 1999 and 2004, they split 3 times. So just think about that while we're talking. So many times, Leon and I get this question, you know, how much do you need to invest? How much do you need to invest? And whoever's trying to read ahead of me, stop. And so, you know, how do you invest? How much? So we decided to do this example. Owning, this is an example if you owned 100 shares of Qualcomm, symbol QCOM, and we use average prices. I know they fluctuate during the course of the year, up, down. We just took the average price for the year. In 1997, Qualcomm stock price per share was $3.38. Pay attention, everybody, right now. Share it, put it on new networks, all that. Because this is just fun to know. People don't even know this is possible. And so This is a real example of what's possible, and it's going to be a cliffhanger at the end too. So in 1997, the total cost, if you bought 100 shares, would be roughly $338 plus 10% trade commission, which almost every platform now is going away with trade commissions. But that means you had a total investment of $348 in initial portfolio, in your initial portfolio investment. So you put in $348. What does that mean? That means now 1998 comes around. You've owned it for a year. The average price a year later would have been $3.27. What does that mean to you? You were actually losing money, theoretically. There's no real gain or loss until you sell. But the calculated loss would have been a couple dollars, not much, like $4. So per share. So you're looking at it like, all right, now my portfolio is worth $327. Some people at this point would get out because they just think it's a dud. They chose wrong. It's never going to do anything. It happened in 1998. I'm telling you, it happened. We stayed the course, and we told the people who were involved in wealth enterprise back then, stay the course. Come 1 year later, they decided to do what's called a stock split. A stock split is when a company says, for every share that you have, we're going to give you some multiplier. The multiplier could be 2, 3, 4, 7. It just depends on what they want to do. It can be 15. Normally, you see 2 for 1. And so that means for every 1 share you have, the company gives you another share. And what they do is they split the cost. If it were a $10 stock, you now will have 2 shares worth $5. And they do that to protect their market cap because they want their market cap to stay the same, but they want to give you additional shares because when they split the price, it, again, theoretically, it means more people have the ability to buy into the stock, thus driving their share prices up, thus increasing the amount of money coming into the company. You want to say anything about market cap, Leon? I know you love talking about that.
Nah, I'm good. Nah, go ahead.
Okay. So now, again, remember we said we just finished losing money from 97 to 98. Come 99, they do a 2 for 1, or well, they didn't even do a 2 for 1 split. The market knew a 2 for 1 split was coming up and started rushing to Qualcomm. Because the market knew it was coming, again, the market is always forward looking, right? The market doesn't look at the past. The market is forward looking. And when people invest, they're normally basing off what they know is going to happen. So now you have these people who are forward looking and they say, okay, it's about to be a 2 for 1 split. Qualcomm's well positioned. The stock went from $3.27 in 1 year to $20.15. Say that again. In 12-month period, it went from $3.27 to $20.15. So now Qualcomm did something I've never seen. They didn't say, okay, we're going to do a 2 for 1 split and wait a couple years. They did 2 splits in 1 year. One was a 2 for 1 split in May 11th, 1999, meaning those 100 shares that we owned in this example became 200 shares. And this 200 shares were, again, at least worth $20.15 per share. Then they did what I would consider to be spectacular. For everybody watching, again, go share this information with a friend. They did a 4 for 1 split at the end of that year in December. So now the 200 shares has a multiplier of 4. 4 times 2 is 8. We now own 800 shares of Qualcomm. Our $348 investment by the end of 1999, going into 2000, becomes this. I'm gonna see if I can make this bigger. Did that get bigger?
Yeah, yep. Mm-hmm.
So in 2000, average stock price was $47 a share. We now own 800 shares. That's $37,600 from $348 investment.
In 3 years.
In 3 years. So
that's on average. That's almost. It's like 15 grand a year. Oh no, 3. That's like 10 grand a year.
10 grand a year.
Yeah, 10 grand a year. Yeah. off of 300 and what, 40 some odd dollars?
Yeah, and actually it's like 12 grand a year.
A little more.
600, like 78 some dollars. But anyway,
yeah.
And so
that's crazy.
So your initial investment of $348 would in 1997 would be roughly $37,600 in portfolio value at the beginning of 2000. But this is the cliffhanger we promised you all. This was right before the bubble burst. And so everyone knows the IPO crash that proceeded in like 2000, 2001, 2002, it cleared up.
Not just IPO, the market crash.
The market crash, yeah. But it really was the tech bubble that created it.
Yeah, it was the tech, all the new recent IPOs. Yeah.
It like PE ratios were off the chart. Nobody was looking at like financials. It was the wild, wild west beyond belief because people just assumed you could throw money into stock market and you were going to win. And we are seeing not a similar situation, but right now with 5G on the horizon, like really being on the horizon, and the fact that we're in this COVID environment, the market's slightly depressed, which the market's come back off its lows at least 20% already. But aside from that, we don't know what you know, a reinfection or anything else will do to drive the market back down. I personally think there are false runs in the market, and we're going to see a few between now and going through the election, because any election year is always a rough marketplace. But this is why you also have guidance, because and you do your research. There are going to be some clear winners, and we're going to, in our group, we're going to, for the members, we're actually going to show what happened after the bubble burst. So with Qualcomm. So for anybody who's not a member of Investing Education Academy and you want to see what happened after this, like what was the next thing to come check us out. If you're interested in seeing, okay, you guys talked about 5 stocks, but I saw 36 up there. I want to know what the other 36 are. Come over to Investing Education Academy on Facebook, and we're going to share it with you. And why are we not telling you this? Because we are a business and we're trying to drive people to our platform. So it's really the place where we want to have a deep conversation about it, not just keep it fluff. But this, I thought this was something everybody had to see. And Leon and I.
No, I'll say one thing about this is the thing I was talking about last time, which is the biggest, which I think is the biggest component of investing that nobody really talks about, which is time. Like you said, if someone had gotten in early and lost that, you know, I don't know, that few dollars after the first few years, they may be like, oh, well, you know, this didn't work out. Let me move on to the next stock. But because, you know, we waited and other people waited, they were rewarded beyond belief. Yeah. So this is where, I mean, it comes back to that time component. And when you get into something, you know, give yourself 3 to 5 years. Say, look, I'm gonna buy this thing. If it drops 10, 15, 20% on me, I'm gonna ride it out, because I've been there. Brent's been there. A lot of people have been there. I mean, look at the market. The market was down during the .com. It's at all-time highs recently. It was down during the credit crisis. It's at all-time highs recently. We're now down because of COVID. In the next 2 or 3 years, it'll be back at all-time highs. So, you know, again, just build that time component and give yourself that time to say, okay, I'm gonna hold this for 3 to 5 years and just wait. It's the hardest thing to do, but, you know, it's the most beneficial.
Yeah. And, you know, even looking at this, going back to the time component, everything Leon and I are talking to you all about is based off of patience. The reason why we talk about mindset so much, and we showed you last week, for anybody who hasn't seen it, go check us out. We showed you a stock that went to zero that we owned. It wasn't, we owned it. So this isn't like, okay, for you, anybody watching for the first time this week, we showed you also some of our huge losses. So go check those out, because that brings balance to the portfolio. And that brings balance to the story we're telling. It's not about just these successes. We're showing you this just to say it is possible.
Right.
And you don't know, like at this place right here, you don't know if it's about to keep going down, if you should jump ship or not, because you don't know. And then from at 20, there may have been people like, oh, that's the top. I made all this money. I'm out. Like, it's enough.
Like that. This example is a 110% outlier. Yeah. This does not happen. Like this happened. This was a once in a lifetime situation. We're showing it just to show that, one, these things can happen, and two, you don't need a lot of money to start, and three, actually, time. So you don't need a lot of money to start investing. And when you do get in, give yourself some time, give yourself some cushion to actually see, you know, the thing come back if it's down on you. But yeah, this right here doesn't happen. Like this was a once in a lifetime thing with all those splits. I mean, the thing about this is now companies don't even split. So I mean, look at Amazon, look at Google, look at all these companies that are now in, you know, $2,000-$3,000, between $1,000 and $3,000. Before they would have split years, they would have split, you know, when they reached like 100, 200. Companies don't split anymore. So, but with fractional shares now, you can actually still participate. So the splitting isn't really needed, but I mean, situations like this, it was just astronomical.
But you know, I'm gonna go to UUNet. But
yeah, good old UUNet. Yeah.
But
we got an option right now if we had done UUNet.
it's a lot going on in the market, everybody, and we want to let you know that there's fun stuff happening in the market. And we chose Unit because they were in all the cell phones. It wasn't like we ran regression analysis and looked at these charting. It was still it was still newly public. I'll say that. It wasn't a new company, but it just made sense. We had a cell phone. All of our friends were had already switched. I mean, we're not that old, but all of our friends had already switched from pagers to cell phones. And we weren't going back. It's not like the technology, they were gonna come back and go, okay, we're taking you back to a pen and pad.
And quick backstory, Unit is a stock back in the, what was it, 2000? I mean, just real quick, some people that don't know. So Unit was a stock. Brent and I used to have these competitions between us, and we would pick a stock and see which one does better. I picked a company called Data Streams. Brent picked a company called Unit. Unit eventually became WorldCom, which now is Verizon. So Unet went from this small startup back in like the 90s, 2000. And now when I say became, I mean, they were bought out. They didn't grow into Verizon.
Yeah.
There were
like 5 times in like a year.
Yeah, there were all these, back in the .com day, there were all these mergers going on. And Unet was one of the companies that was bought up and became WorldCom, which then became Verizon. The big, as we now know is Verizon. So long story short is, had we bought that back then, because we ended up going with my pick, which was Data Stream, which did fine, by the way.
Leon has the best arguments in the world. I was like,
we got a good return. There was no, but we would be on an island somewhere right now had we got Unit. I'm just saying, we both missed the boat on Brent's pick that year.
But you know what though? That brings us to you all. And I mean, those wins, losses, misses, that tells us we've experienced the emotion of like missing the big boat. And you're like, oh, I mean, we joke about it today. That happened when we were 16, I think.
Yeah, that's right. It was more the mid-90s. Yeah. It was like the mid-90s, yeah.
Yeah, because we were talking about the cars we would have had graduating.
Right. Right, yeah.
But also there's no telling when we would have sold it because we were experienced investors. So, it's a lot to it. And we joke about it now because hindsight is always 20/20 in the market. And you're going to hear probably me pontificate about mindset and investing more than Leon, because Leon has always been more technical. And that's needed. But I'm always like, what's programming you at night to be okay emotionally? Because there's a lot of emotion based on being able to make it that year, that 2 years. But it goes back to the type of money that you're investing when you make these investments. So are you using
risk capital?
Or are you using the money that you were going to send your kids to college with? And that's not a complete financial plan. And so in the community, we're going to talk a lot more about overall financial picture. And Leon and I have discussed, we are thinking about adding a component that's going to teach financial literacy at the base level so people can understand what their risk capital is and how to use it. So we're still putting it together. And, if you want to say anything about it, Lee, we can.
Just because we talk about risk capital a lot, and we say it should be, nothing you're going to feed your kids with or, buy your medicine with. But that's still kind of abstract to people because it's like right now, especially right now, everybody's money is money to feed the kids with and, you buy your medicine with. So at some point, we actually want to put together a plan where we actually kind of do just a very light, high level kind of analysis of people's finances that we can then identify the risk capital and not just look at your bank account and say, oh, everything's my risk capital. Not necessarily. We're going to help people kind of address that.
Yeah. So understanding your finances by looking at your budget.
Yep.
So, that's really so you can get to a place where you can invest your money. Put it. So that takes us to the drum roll, and we're about to give you all our selections for today. Leon, you want to go first? Want me to go first?
Yeah. So mine was actually off of the list that I showed you earlier. One of the 5G companies is Verizon. Stock symbol VZ. Today it closed at $54.26. Little few stats on it. Its 2-year profit growth rate is about 12%. Its 2-year sales growth rate is about 1.75%. What's really lovely about it, it pays a 4.5% dividend yield. Recap on that, dividend yield is just like an interest rate that you're paid every year, no matter what the stock does. You're going to get that 4.5% no matter what. Little back news on it related to 5G. So Verizon's 5G right now, from my research, companies say there's always the fastest. But Verizon is saying their 5G right now, which is in 35 cities, is 20 times faster than its current 4G. And they're saying it's the fastest 5G in the United States. So according to them, they're leading the pack on 5G. And that's why they were my choice. Again, 12% profit rate, growth rate, 1.75% sales growth rate, pays a 4.5% dividend yield, and closed at $54.26 today, ticker symbol VZ.
All right. And for me, I picked Google. And the reason I picked Google, number one, is similar to what Leon mentioned earlier. Stock splits don't happen like they used to. And the big reason for that is Berkshire Hathaway. We call it what it is. Once they really showed the model works where you can just keep going and you don't have to split, a lot of companies follow suit. And it's when Berkshire Hathaway hit 10,000 a share, no, 5,000 a share, and they kept climbing, was right around 99, if memory serves me correctly. I'm doing all this from memory, so I've done no research. But I believe that is my theory, that that's when the market started to follow suit and you did not see companies split. Actually, it became kind of a badge of honor to see how high your stock could go.
I was just about to say that. I would say now it's more of a vanity metric for companies to say, look, we're now at $2,000. We're now at $4,000. You know, like you said, Berkshire Hathaway, which is now I think at 200 and some odd $1,000 per share, is a granddaddy. But yeah, companies now like to see their stock go to $3,000-$4,000. But with, like I said, with fractional shares now, it really doesn't matter. If you have $100 on a $2,000 stock, you can still get in.
So I want to talk about that concept of what Leon said real quick. Is why I picked Google. When stocks used to split, and as you saw that jump in Qualcomm, that was typical of a pre-split stock. It would normally jump, people would get excited, and then it would drop, similar to IPO. But right now, with companies being able to sell fractional shares, it's opening up the marketplace to investors that normally couldn't afford to get in. And because it's opening up the market to companies that people who normally couldn't get in, when Google or Amazon, these companies hit these really high price points, the market hasn't caught up to the fact that fractional shares exist. It hasn't, not even close. And when people really understand what being able to buy a fractional share means percentage-wise, companies like Google, companies like Amazon are going to be much more highly targeted than what they are right now. People are avoiding them because they aren't aware that they can buy into them. Mm-hmm. And there's still a lot of people that really don't even understand the market, let alone fractional shares.
A lot of people don't know fractional shares exist.
Yeah, they have no clue. Mm-hmm. And before, what would happen if you bought a fractional share? It would be this small percentage of a stock that was like floating, right? You have like a third of the stock or 1/1000th of the stock. And it was hard to sell because market makers couldn't really go out and sell that fractional share. That doesn't exist now with, the digital acceptance of trades on the stock exchanges. So fractional shares, they sell all the time. Mm-hmm. And we can actually do a whole thing on fractional shares, but let me get back to Google. So I chose Google right now, moving into 5G. They are one of the biggest information hoarders of all time. And they have our memories captive. They have our information captive, and information is still king, and it's going to continue to be king. Google for me is trading at $1,406 a share. Today alone, it was up $33, which means tomorrow it's probably gonna be a pullback and I'm gonna move like a jerk. But as right now, I'm still picking Google because we're talking about what the long term, the long run. Google is not going anywhere. And when we get to a place where, the internet is moving almost at the speed of thought, Google's going to be the one processing more information than anybody else, or amongst the fastest, because you still have a lot of big players out there, but Google's going to stay one of the big players. So I chose Google. You can buy fractional shares. It's not unattainable, or you can buy a few shares. Or we do have some very wealthy people to watch this. You should position yourself inside of Google. It's not too late.
No, not even close.
So that being said, Leon, you want to close out?
Yeah. So just again, the 5G that we talked about today was 5G, the huge opportunity coming. It's going to push up to be a 40, 50, some people say $100 billion market. I say go back and watch the earlier part of this video where we laid out the opportunity and the type of companies that you can invest in to take advantage of the coming 5G boom.
Yeah, and if you want to continue this conversation, you can come over to Facebook and just type in Investing Education Academy. Find us, join us, invite your friends to join the conversation. This is the platform, judge free, but we can just learn and share, because if we're not pulling each other out, what are we really doing? So, everybody, we look forward to seeing you over in our group. We will be going live on IG on Sundays now. We've received requests, which is kind of cool. And like we said before, if you all send us requests, we will do our best to comply. So Sundays, we will be going live on IG. I do not know what time. We're still working it out. Did we say what time, Lee?
Nah. Just know that we're gonna do Sunday evenings. Don't really know the time yet.
Okay. So look for Sunday. We look for you. And if you want to kind of get ready, you can find us on IG at what, Lee?
Investing Education Academy. Just search it in the search bar.
Okay. All right, everybody. Thank you. And we will talk to you later.
Yeah.
We should come up with a tagline.
We should.
All right.